Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 22nd of July. Let's dive into the week's stock market news. European markets react to trade tensions and economic data. In local currency terms, the Pan-European Stocks Europe 600 index ended 2.68% lower amid rising trade tensions between the US and China. Among major continental indexes, Germany's DAX dropped 3.07%. France's CAC 40 index lost 2.46%, while Italy's FTSE MIB gave back 1.05%. The UK's FTSE 100 index declined 1.18%. The ECB maintained interest rates at 3.75%, as anticipated, but signaled a potential rate adjustment in September. ECB President Lagarde emphasized that future decisions will be data-dependent, noting downside risks to economic growth and expectations for inflation to remain at current levels throughout the year, before declining in late 2025. ECB's bank lending survey reveals a two-year high in household loan demand due to easier mortgage terms and housing market optimism. Banks expect this trend to persist in Q3. Eurostat data shows euro area industrial production dipped 0.6% in May from April, marking the first decline since January. Annual output fell 2.9%, with sharp drops in Germany, Italy, and France. UK headline inflation remained at 2% in June, with easing energy costs offsetting persistent core inflation at 3.5%. Services inflation, a key indicator for policymakers, held steady at 5.7%. Average earnings growth slowed to 5.7% in the 3 months to May, a low since mid-2022, but still nearly double the Bank of England's 2% target. Now our insight into alternative markets, embracing technology to manage the growth of fund finance. Fund finance is experiencing rapid growth, leading to increased operational demands for both sponsors and lenders. Sumit Gupta, co-founder and managing director of Voxane Partners, discusses how technology can help address these challenges and enable scalability in the evolving financial landscape. Subscription lines and NAV lending have seen significant growth in recent years. The global subscription finance market is estimated to be worth $900 billion, driven by managers' demand for short-term liquidity solutions. NAV financing, currently valued at over $100 billion, is projected to grow even faster by 2030, as funds seek better liquidity management, distribution optimization, return improvement, and capital for follow-on investments. This growth in fund finance brings increased operational complexity. Borrowers need to provide continuous data and reporting on collateral, while lenders must assess risks and validate information. The complexity grows as the need to monitor covenants and KPIs at both the fund and underlying collateral levels increases. Technology can address these challenges through automation and scalability. For borrowers, it can automate borrowing base reporting, data preparation, and compliance processes tailored to lender requirements. For lenders, technology can streamline risk assessment, data validation, and monitoring, enabling a centralized view of facilities and better risk management. While there is no universal standard for fund finance technology, its adoption is increasing. Using a shared platform can improve efficiency and transparency between lenders and borrowers. Oxane Partners initially focused on supporting lenders, but many now encourage borrowers to adopt the same tools, resulting in significant benefits for both parties. Technology plays a crucial role in identifying hidden risks by monitoring covenants and risk parameters at both the facility and underlying asset levels. This helps lenders understand risk concentration and manage exposures across multiple facilities. In conclusion, embracing technology is essential for funds to stay ahead of the curve and meet the growing demands of investors and lenders in the expanding fund finance landscape.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.